Did Russia's oil empire, which powers the Kremlin, collapse from within? What if Western sanctions are strangling Lukoil, Russia's largest private oil business, freezing billions of dollars, seizing assets, and paralyzing worldwide operations overnight? That's occurring now, and cracks are spreading across Europe, the Middle East, and Moscow. A $100 billion giant, Lukoil was the pride of Russian capitalism for years, proving Russia could compete with the West. Today, that giant is gasping for financial air as sanctions, delayed payments, and falling exports set off a chain reaction that could destroy Russia's oil industry. Understanding what's lost helps gauge this collapse's scope. Unlike Rosneft, Lukoil is a major state-owned company. It was Russia's largest private firm, employing thousands and producing 2.2 million barrels of oil equivalent daily. Lukoil is Russia's energy lifeblood, providing crude oil and natural gas. Its 2024 revenue exceeded 8.6 trillion rubles, or $100 billion. About $10 billion in profit. These results made Lukoil a national colossus, funding the state budget and the idea that Russia's private energy sector could resist international pressure. But that illusion is gone. Recent U.S. and U.K. sanctions target Rosneft and Lukoil. These new restrictions freeze operations, limit trade lines, and isolate the firm from global markets, unlike previous sanctions that left oil transactions open. Washington's latest penalties give Lukoil a dismal deadline, November 21. By then, all Western corporations, merchants, and financial partners had to stop doing business with Lukoil or face secondary sanctions. That implies anyone in Europe, Asia, or the Middle East caught buying or transporting Lukoil's oil might be blacklisted from U.S. banking institutions. Then terror set in. International purchasers fled overnight. The Iraqi National Oil Marketing Office immediately canceled 3 significant Lukoil orders for November 11, 18, and 26, even those due before the sanction deadline. Nobody wants to be the last to have Russian oil when sanctions are imposed. Not just a few missed shipments. Global trust in Russian oil has collapsed. Iraq's cancellations indicate that even non-aligned nations are avoiding the West due to financial concerns and potential blacklisting. Sanctions stopped trade and froze the company's finances. Lukoil's Swiss trading arm, which sells oil abroad, is barred. Brokers won't touch its shipments, insurers won't cover, and banks won't pay. Crude oil cannot move without those payment systems. Oil delivery, ship chartering, and bill payment are impossible. The global network that pushed billions into Lukoil's accounts is silent. The ripples are terrible. Also banned are payments to Lukoil's downstream affiliate, which refines oil and runs fuel stations. Many Finnish petrol stations have closed. Local economies suffer from layoffs. The issue extends beyond Russia. The collapse is extending to Bulgaria and Romania, where Lukoil has refineries and retail networks. To prevent fuel market upheaval and political instability, both governments are considering nationalizing Lukoil assets from Russian control. Lukoil is selling all of its international assets to Gunvor for $22 billion in a desperate fire sale. Written, it sounds like a lifeline. Actually, it's a trap. Gunvor may be registered in Switzerland and Cyprus, but its roots are in Russia, so Western regulators will closely monitor any transaction between the two corporations. If the deal is approved, paying $22 billion to a sanctioned corporation would contravene U.S. and European law, therefore Lukoil cannot receive the payment. This sale is almost symbolic, a frantic attempt to move assets no one can safely touch. The irony hurts. Lukoil spent hundreds of billions of dollars establishing this global empire, but now it must sell it for a fraction of that and may not see a cent. Like the billions in Russian assets held in Western banks since 2022, Gunvor's wealth would likely be frozen in escrow accounts if he tried to pay. Thus, Moscow may expect $22 billion but will likely receive less. Disaster strikes Lukoil's operations. Oil giants depend on cash flow, which has been cut. The corporation needs finance to maintain its refineries, pipelines, and workers. But payments are blocked and exports are falling, so cash isn't flowing in. Lukoil's global links are now its biggest weakness. Its global presence has been reduced to a Russia-only firm stuck in its borders by sanctions. Oil industry isolation kills. Global commodity, oil. It requires ongoing international trade, financing, and logistics. As the ruble weakens, Russia needs international currency, which a company that can't export loses. Lukoil's international businesses brought billions in foreign currency, stabilizing Russia's economy. Stream has dried up completely. As its global dominion collapses like a supernova, the firm must withdraw. Not simply Lukoil's issue. The national catastrophe is disguised. Russian GDP is directly affected by the company's collapse. Each dollar Lukoil loses means the Russian government loses taxes and foreign currency reserves. Lukoil may stop paying taxes as cash flow dwindles. It's one of Russia's top taxpayers, so that's a major blow to an economy already struggling with war costs, inflation, and falling foreign investment. Russia's economy has been struggling for months, supported by wartime spending and shadow trade with China, India, and other nations buying inexpensive oil. But even those lifelines are fading. India and China, previously steady buyers, are decreasing back due to secondary penalties that might hurt their worldwide trade. NATO member Turkey, which navigated a narrow line, has decreased its Russian oil purchases. The world is abandoning Moscow's energy empire. Russian strength was based on oil for decades. It funded wars, propaganda, and ruble survival. Even in global isolation, Lukoil was supposed to show Russia's private sector could survive. Today, that illusion collapses. Russia's energy heart has been smothered by sanctions, not war. The collapse of Lukoil sends a message. Any Russian enterprise, big or little, faces economic isolation. Moscow claims this crisis is brief, but the situation is different. Oil company Lukoil is closing gas stations, seizing or selling refineries, freezing payments, canceling shipments, and sending staff home. The global oil powerhouse is now a domestic shell, a fossil. The rippling effects might soon affect millions of Russian workers who depend on Lukoil. Layoffs may cause economic difficulties for entire areas, making it difficult for Moscow to manage. Western strategy has changed. Fearing global supply shocks and energy crises, Western governments avoided pursuing Russia's main oil businesses for nearly 2 years. However, the oil market has stabilized, demand has declined, and U.S. and Middle Eastern producers have increased supply. This move allows Washington and London to tighten the rope. They're doing that now. Lukoil and Rosneft are the initial targets of this new round of targeted economic strikes to cut Russia off from global finance. Lukoil's downfall will send a clear message. Russia's private firms need Western money, logistics, and trust to survive. Oil is no longer everything. The goal is to undermine Russia's economic power. Analysts predict Lukoil's production to drop in the coming months as storage fills and exports are prohibited. The corporation must close wells, refineries, and cut staff. With less revenue, Moscow will have to raise taxes, print money, or slash public spending, which might feed inflation and instability. With Western sanctions targeting shipping and insurance, even smaller Russian oil enterprises may suffer. Lukoil's failure isn't isolated. It's the first step in a potential energy catastrophe in Russia.